Good morning and welcome to today's US Market Daily Outlook. The market is showing a bullish tone today, largely driven by strong economic data releases that suggest resilience in the US economy, despite lingering inflation concerns. Major indices are reflecting investor optimism, with technology and growth sectors leading the charge. Key catalysts for today include the robust GDP growth and surprisingly strong non-farm payrolls, which seem to be overshadowing the uptick in inflation metrics. We'll also be keeping an eye on the Federal Reserve's stance, which held rates steady this month. For investors, the immediate focus is on sustaining this positive momentum, with the S&P 500 eyeing a potential push towards new highs and identifying key support levels around recent consolidation zones. Turning to the economic landscape, today's data presents a mixed but generally supportive picture for the equity market. We saw a notable increase in both CPI and PPI, signaling resurfacing inflationary pressures. However, this was largely offset by a robust GDP growth rate of 3.3% quarter-over-quarter and a strong non-farm payrolls report showing 73,000 new jobs, far exceeding expectations. The unemployment rate also ticked up slightly to 4.2%. While ISM manufacturing PMI continues to contract at 48, the services PMI, though slowing, remains in expansionary territory at 50.1. The Federal Reserve maintained its interest rate at 4.5%, adopting a wait-and-see approach. From a Fed perspective, the strong jobs and GDP data might provide flexibility, but rising inflation could put future rate hikes back on the table. For the market, this implies a narrative of resilient growth, which is generally risk-on. But investors will be closely watching for any hawkish shifts from the Fed if inflation persists. This robust economic backdrop provides a cautiously bullish tailwind for equities, especially for growth-oriented sectors and companies like Alibaba, which can leverage a strong global economy. Looking at the S&P 500, today's session shows a clear upward trajectory, with the index displaying strong momentum. The chart indicates a decisive move higher, pushing past previous resistance levels, suggesting a potential bullish breakout. Volume appears robust, supporting this upward price action. The nearest support level can be identified around the 5,200 mark, while the index is now testing new resistance in the 5,250 to 5,270 range. Based on the positive economic data, particularly the strong GDP and employment figures, investors seem to be shrugging off inflation concerns, at least for now, and focusing on growth. The current pattern suggests continued optimism, with the potential for further gains if momentum holds. The Dow Jones Industrial Average also enjoyed a day of steady gains, closing strongly in positive territory. This reflects a continuation of its recent upward trend, driven by the strong performance of blue-chip stocks. The index successfully held above its immediate support level, which is now around 38,800, and is actively challenging overhead resistance in the 39,200 to 39,300 zone. Volume appears healthy, indicating broad participation. The robust non-farm payrolls and GDP figures are providing a solid foundation for the industrial heavyweights within the Dow. This signals investor confidence in the broader economic recovery and corporate earnings, paving the way for potential further upside if this positive sentiment persists. The Nasdaq Composite, heavily weighted with technology and growth stocks, is demonstrating significant strength today, leading the market higher. The chart shows a powerful surge, indicating a clear bullish breakout attempt, especially in the context of yesterday's robust close. Key support is now established around the 16,800 level, while the index is actively challenging the 17,000 to 1,710 resistance zone. The elevated volume reinforces the conviction behind this move. With the strong economic indicators and sustained interest in AI and innovative technologies, the Nasdaq is benefiting immensely. This performance underscores investor appetite for growth, positioning the index for potential new highs if this momentum can be maintained. The VIX, commonly known as the Fear Index, has seen a noticeable decline today, now trading below the 15 mark. This places it firmly in a complacent volatility regime, indicating that market participants perceive lower immediate risks. This drop in the VIX suggests that the positive economic data, particularly the strong GDP and employment figures, has quelled investor anxiety, leading to an increased appetite for risk-on assets. The declining VIX supports a higher equity risk premium, as investors demand less compensation for holding riskier assets. Current catalysts for this downward move include reduced geopolitical tensions and a generally optimistic outlook regarding corporate earnings. A VIX below 15 often precedes periods of sustained market rallies, suggesting a potentially calm and steady outlook for equities in the near term, barring any unforeseen shocks.
Turning our attention to Alibaba, BABA's chart shows a highly bullish picture today. The stock has experienced a strong breakout, breaching the upper Bollinger Band and indicating significant upward pressure. The price closed at 135.04, with intraday highs reaching 135.98. Immediate resistance is observed around the 135 to 136 zone, which was tested today, while key support is forming around the 132.00 to 132.50 area, aligning with the 20-period moving average of the Bollinger Band. The relative strength index, or RSI, is currently at 72.27, firmly in overbought territory, suggesting that while momentum is strong, a short-term pullback could be possible. The MACD has shown a clear bullish crossover with expanding histogram bars, further reinforcing the positive sentiment. Importantly, today's move came with exceptionally high volume, far exceeding the 9-period SMA of 12.008 million, adding conviction to the breakout. Stochastic oscillators are also deeply in overbought territory. This technical strength, coupled with the strong economic backdrop and positive news around AI, points to continued bullish momentum for BABA, with an invalidation level if it decisively breaks below 130. Moving to specific news, a recent article highlights the AI boom at Alibaba. Will product momentum meet strategic visibility? This news emphasizes Alibaba's aggressive push into artificial intelligence, particularly through its cloud computing division. The article discusses the strong product momentum derived from its cutting-edge AI developments, raising questions about whether this translates into clear strategic visibility and long-term financial impact. Fundamentally, Alibaba's AI investments are crucial for its cloud segment and overall ecosystem, potentially enhancing its competitive edge against rivals. The market reaction to such news is generally positive, as investors anticipate future revenue growth and increased profitability from these advanced technologies. Looking ahead, key catalysts will be Alibaba's upcoming earnings reports, where management will ideally provide more clarity on the monetization strategies and scale of their AI initiatives. The near-term outlook for Alibaba remains bullish, driven by the overall tech sector strength and the potential for its AI advancements to unlock significant value, reinforcing its position as a major player in the global digital economy. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.